Futures right now look pretty good, up 250. Part of that is Disney. Sarat Sethi is a managing partner and portfolio manager for DCLA and a CNBC contributor. He's got a lot to worry about, a lot of money to spread around, $7 billion plus, right, Sarat? That's why, I don't know, are you sleeping okay?
I sleep okay, but it's not easy time, especially when clients' capital, is where it is at this point. But
what about Disney?
There is some good opportunity out there.
Yeah, you positive on Disney?
I am, Joe. I was listening to what you guys were talking about this morning. I think Iger's doing a great job. He's looking at the organization. Your points about having the creators actually be responsible, accountable for the P&L, I think is very important. And I think, this is a way for Disney to kind of come back to what it was. The stock was, $200 just a couple of years ago. COVID was not good to it, but separating the businesses, the core businesses are really worth a lot more than what we have. And it's a cash flow company. I think reinstating some type of dividend and focusing on what Disney's really all about, I think will bring some great value back to this company.
I guess looking at those three divisions, I guess it makes sense. There are times I do wonder about ESPN and how it fits in and how much it would be worth outside of the company. But they apparently considered it. But before Iger came back, they considered it and decided not to spin it off. Now that he's back, do you think is that going to stay that way, or would they revisit that?
So I think the way they've structured it implicitly in there is to say, okay, we can actually separate the financials, make it public disclosure, and give it some time. And whether it's 12, 18 months, if it's performing well, you can actually use it as a potential to either spin, sell, et cetera. Joe, one of the things that we're seeing, companies are creating value right now, not by merging, but really by spinning off divisions. And he was smart to say, hey, it's not on the block, but once you can actually identify each of the financials of the separate divisions, there could be potential there to spin it or actually sell it to somebody else. So I think it's a smart move to separate it from the rest of the company to actually see, because if it does perform well or it doesn't, you can actually identify the different parts of the company that you think create value for shareholders.
With the advent of big tech and AI and the metaverse and all these things, Sarat, what does the media or advertising-based company of the future look like? Is it a streamlined content creator? Does it have pipes to do the distribution? What is the perfect model in your view for
so actually, it's interesting you bring it up for a Disney. I think creativity, content's going to be really important, getting the customers and the recurring revenue, right? The kind of the Netflix model they're trying to do with everybody. But Disney's got an interesting thing too, because I think they have this asset base, this recurring revenue asset base on the amusement parks. You look at the Star Wars, the Avatar, and every generation that comes through wants to be part of Disney, or they can just do a little bit more to kind of add to it. So you have a combination of hard assets. He talked on the call, I think Avatar is going to have a separate piece now in the amusement park. So you bring people back who are watching this on the big screen or at home. I think that's where the model of the future is going to be. And then, you keep on having the recurring revenue. You can do so many other things. So I do think they've got a great model here. It's just been undervalued or probably just not run the right way. But content's going to be really important. You need people to watch.